Okay, hello everybody. So in this video, we're going to calculate the fixed overhead variances. If you look here, we need to get these different values: the standard hours, standard rate. The standard rate is the fixed overhead absorption rate. So to calculate this for both the products, we need to get the fixed overhead cost per unit, which we can get from the question. And we can see that it was £40 for Abby and £20 for Lee. So a fixed overhead cost of £40 per unit for Abby and £20 per Lee. We also know that fixed overheads, it says in the question, are absorbed on a per labour hours basis. So what we need to find now is the number of labour hours it takes to produce a unit. And we calculated in the labour variances that it takes 2 hours to produce a unit of Abby and 1 hour to produce a unit of Lee. So once we know this data, once we know the fixed overhead cost per unit and we know the labour hours per unit, we can calculate the standard fixed overhead absorption rate. So we get that by taking the overhead cost, the fixed overhead cost per unit, dividing it by the number of labour hours per unit. So for Abby, that would be 40 divided by 2. For Lee, that would be 20 divided by 1. And both these answers gives us £20. So the standard fixed overhead absorption rate across the company is £20. They'll always be the same. So if there's 2 products, and because the labour cost per hour is £10 for both products, it kind of stems from that the fixed overhead absorption rate will be the same for both products. So we want to make sure we get the same fixed overhead absorption rate for both the products. And that's the £20 applies across the company. So we've got the standard overhead absorption rate, which is maybe the trickiest one to get. We then want to find the standard hours. So the standard hours is the total number of hours we budgeted to spend in the project for both to produce the given number of both units, which was 23,100. We can see from the labour variances. So we stick the 23,100 in here, and we multiply that by the 20 to get 462,000. The next one is a little bit tricky, which is the actual production hours. So to calculate the actual production hours, we want to do for the fixed overhead variances, it will be the total actual hours, including overtime, minus the idle time. So if we look at the labour amount that was actually spent, the amount of hours spent, so there was actually 23,000 hours in the project. That included 90 hours of idle time and 100 hours of overtime. So to get the actual production hours that we use for the fixed costs, for the fixed overhead, will be the actual hours will be equal to the total labour hours minus the idle time, which will give us 22,910 hours. So in here we plug the 22,910 hours. That is a little bit nuanced, especially because the actual production hours differ when we're doing the labour variances. I might have said that was something else. I might have included the overtime or excluded the overtime at one point. So I'll be slightly lenient in the marking in this one just because I put the wrong number there, but just make sure that it's going to be the actual total hours, including overtime, minus the idle time, which gives us the 22,910 there. We've got the standard rate of 20, multiply these two to get B. Next thing we need for C is the budgeted overhead. So to get the budgeted overhead, it's going to be for Abby, we budgeted £40 per unit as the fixed overhead cost. There were 7,000 units, so the budgeted overhead for Abby is these two numbers multiplied, which is £280,000. For Lee, it's £20 is the fixed overhead cost per unit, times the budgeted units of 9,000 gives us 180,000. So the total budgeted overhead is just going to be these two numbers added together. So 280,000 plus the 180,000 which gives us the 460,000. Last one we want is the actual overhead. And the actual overhead we can get from the question. It tells us the actual overhead is 450,000. So 450,000 is the actual fixed overhead that's incurred. So we stick the 450,000 in there. And then using these numbers, we've got A, B, C, and D. From these, we can calculate the efficiency variance, which is E minus B, the capacity variance, which is B minus C, and so on. And we get the overall cost variance is A minus D, which is 462,000, the amount we budgeted for. Take away what it actually came in as, which was 450,000. And if we do these numbers, take them away from one another, we get £12,000. So the budget overhead was £12,000 less than we anticipated. So it was a £12,000 favourable variance. Okay, so hope that makes some sense. And in the next video, we'll look at how to reconcile the budget.